Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. The US CPI is out and it has more or less provided more assurance to market participants that the Fed will cut in its December meeting. There are various details to look at, especially how the shelter inflation performed, since it's a major pain point for the US economy. On a separate note, providers of the US data, which moves markets by trillions of dollars, are facing funding challenges. For example, the Bureau of Labor Statistics is finding it very hard not to reduce the sample size of its unemployment rate survey. There is a fear that the funding challenges may become more acute when President-elect Trump takes office. Good morning, JK. Your take on yesterday's CPI data. Today, there's also the ECB rate decision. So, what are you expecting from that event?
Hi, good morning, Swaraj. Yes, it all came on bang on expectations on the consumer price. But what is concerning for the market is that the month-on-month inflation is holding on at 0.3% for the last 4 months. And while the shelter inflation did moderate, the used car prices were again contributing to the higher, inflation. And year-on-year inflation also was higher on the headline at 2.7%. So I think the inflation remaining sticky and expected inflationary policies of the new government will definitely look for a hawkish cut by Fed when they meet next week. Yes, they will cut. 94% probability is what market also discounting. But I think the guideline for future will be very important. I think that is going to be very cautious. So that keeps the markets on edge. In fact, the bond yields have edged up, particularly on the long end. The 10-year yield, which was at 4.1617, is gone to 4.26 yesterday, and even the 2-year yield is higher at 4.17%. Now, while we are focused on the US inflation, we had some very interesting developments outside of US. Brazil hiked interest rate by as much as 1% to 12.25% yesterday, once again fighting inflation, and indicated that there will be 2% more hike in their rate by March, so another hawkish hike. Canada had a hawkish cut. They cut the rate by 0.5% yesterday. This is the second consecutive high 0.5% hike they did, but then more gradually approach on interest rate going forward is seen as a hawkish point. So Canadian dollar has recovered somewhat after having seen a multi-year low. Brazil, of course, also saw the currency improve after the hike by 1% by the central bank. Today, Australia's monthly employment report came quite strong. Employment increasing more than expected, unemployment rate dropping to 3.9% from 4.2% expected. So again, it has had impact of strengthening the Aussie, which had seen a multi-month low at 0.6340, and now it is above 6.64. And now we are not done with it this week, because we have European Central Bank meeting today for a policy decision, expecting another 0.25% rate cut. This is the fourth time they will be cutting the rate. The rate will be falling to 3.15%. Very small minority expect 50 basis points. That is not our expectation. But again, what their forecast for future inflation and growth, as well as what the forward guidance, will be very important. Euro has taken the moves in the US inflation and the yields in its stride, trading above 1.05. Probably even the ECB rate cut is well discounted by euro. So not seen much in the major currencies yesterday. Then, of course, we will see India's own macro numbers. IIP expected higher at 3.5% from 3.1% yesterday, and the CPI to fall to 5.5% from 6.21% that was seen last month. So further moderation in Indian inflation, if it surprises on the lower side, can pave the way for a definite cut in the policy rate by RBI in February. Of course, US PPI inflation also will be due tonight. An increase is expected in headline as well as core inflation, though less important from a policy approach. It will be seen, interestingly, because that may eventually persistent inflation can lead to higher CPI as well. So there's a lot of focus on inflation numbers and the policies. On the currencies, some reports are indicating that China will let the yuan fall in 2025 towards 7.50 in response to higher tariff by the Trump administration. Kept all the Asian currencies on the edge yesterday. And of course, as I said, the major currencies were in a range. But the rupee itself saw a marginal new low, and but that is, that's not surprising because it was just another day of marginal new low, just following the pattern of last several weeks. Although, as anticipated by the market, there was no change in the approach which the central bank, did after the appointment of new governor. There was consistent offer from PSU banks, even as demand remained elevated. This time more due to offshore premiums. Though FI numbers were only a small negative. Just for a perspective, FIs have pumped in more than 5 billion this month, 3 billion for stocks and the rest for the bonds. But the rupee weakness has persisted with local importer demand and arbitrage related bids. For the short term, I'm not seeing any change in the gradual weakening trend, while upcoming macro events like India inflation, FOMC, BOJ rate decision are likely to possibly change the course. The next target for the rupee is seen at 85 psychological mark. So we are swamped with a lot of policy events and the economic data. The markets are probably continuing to digest, because this is not a period being December when you see a big directional move emerging. It's more based on the flows and also position adjustment. So I think all big moves will be reserved for January when the new administration also takes over. Thank you.
Thank you, JK. And a lot of attention on inflation and, of course, the monetary policy decisions. Even ECB, we have a meeting by ECB today, and there's expectations of another 25 basis point cut. This is the fourth time they will be cutting during this rate cycle. And, of course, the forward guidance is very important considering the challenges being faced by the euro. But as JK mentioned, very importantly, that despite all the US CPI and all the developments that are going on in the Europe, euro is holding comfortably onto the 1.05 level. So there's, of course, a little bit of resilience over there. When it comes to other central banks, Brazil hiked by 1% yesterday and committed to another 2% in the coming meetings. Canada has had a hawkish cut. They cut by 50 basis points, but maintained a tone of caution on further cuts. US CPI itself, the data that was released yesterday, month-on-month inflation is holding on at 0.3%, which is proving to be sticky. As JK mentioned, there may be a hawkish cut by the Fed when they meet next week, as inflation remains sticky, and inflationary policies may make it even trickier for the Fed to stick to its mandate. India CPI will also be released today. If there is further fall in inflation, it may encourage a build-up of rate cut expectations. So a lot of focus on inflation numbers this week. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.